All right. Sorry. Here we are, folks. Today is November the 17th, 2025, and I've been working. I haven't been doing a lot of work, but I need to add another algo over here. I have pretty much, I think this one here, I think I've pretty much retired. Either 61 or 64. I pulled them off of my platform. Let's see, under algo penny, I've got 42. I've got 64. I've retired 61. It was taking a lot of hits, if you will. All right, looks like we have a few more contenders for penny stocks. So today I'm just gonna kind of show you where I'm at these past couple days, week or so. So I just copied and pasted that. I've got the 5-minute time frame and I've got the 1-minute time frame. After about 2 seconds, it does its calculations to see whether or not we have any issues with the chart. And then, especially if I'm looking at it throughout the day, I'll go and I'll look at the chart and just see visually, because some of the times this will get kicked out on account of maybe the chart gapped up in the day, like it looked like it may have done. No, 36. But if it gapped up in the day because of a halt or something like that, then it'll skip time on the 15-second bar, and so that will take it out of the running as something that I'm willing to trade. But overall, this one doesn't look so bad. So what's going on with this one? It says gaps and static. Oh, I'm on the 1-minute time frame. So let's drop down to the 15-second time frame. Okay, so on the 15-second time frame, like you see that black, this black candle right here. This black candle signifies that there is a gap in time. You see at the very bottom, down here at the very bottom, the time says 15:22:30. Go back to this one. It says, okay, 15:22:30, and then if you go back to this one, it says 15:22:00. So that means that it skipped a 15-second bar. So that just to me says that there is a lack of liquidity, especially for a stock that should be a stock in play, a stock of the day, should have enough liquidity to make transactions on every bar. And if it doesn't, or if we have some flat areas where the close is the same as the close 3 bars ago, if it just kind of moves sideways, then yeah, I'm not trading that. You see this? This close at one level, close at the same level, close at the same level. That's what I consider to be static. So I wouldn't take a trade on that. So like I said, my algorithms, my checks will go through and it'll check all that stuff just to make sure that I'm not in something that I don't want to be in. So for mid-large cap stocks, this is something I've been moving toward in the last, I don't know, I've really got to put it on the calendar to see when I've been working through this stuff. But I started off with the penny stocks and then I moved to the mid-large cap. Next, I've kind of started looking at some of the documentation, the logic, the coding already for options. So I'll be looking at that next. But because that comes at a higher cost, that'll be later. I've got futures really to go next, and then I'll come to options. But I'm really interested in options, so who knows? All right, so this is an indicator I put together over the at the end of last week and over the weekend. It's just a better updated version of another program that I had, which either way, there's still issues with the positions provider. And so these numbers don't always update. This doesn't always work. So I'm just going to I'm going to leave this here, but I'm going to put this on the back burner because it's not something that I'm wanting to invest a lot of time into if it's not going to be working. All right, but so up here, just like on the penny stock page, up here I have the 5-minute time frame. So the indicate or the algos that will work on the 5-minute time frame, that would be this guy here, strategy 72. This one here, strategy 71, is the calculation has thrown a stop error, stop calculation, because it's the wrong time frame, TF. All right, and then so this strategy down here, this one works with this algo, strategy 71. It does not work on the, this indicator does not work on the 1 minute time frame. Only this one does. So right now I've just got one of each for the mid to large cap stocks. All right, here is my indicator that shows, as opposed to just seeing the number of the cap, the market capitalization, whether it's 2 billion to 10 billion, you know, a mid cap stock, it will just say medium, large, small. So I can visually see a lot easier what I'm working with. As you see, you don't see any micros over here. The micros should pretty much show up on the penny stocks. All right, but what I put together just today, just a little bit ago, I finally got it together, and I am proud of it. All right, excuse me. So if you look at my P&L, this is the P&L. I guess it's over like the last 30 days. I haven't really been doing much of the algo trading on these mid to large caps prior to that, and I wasn't trading these mid to large stocks prior to that. So again, I'm just really firing off these algos to see what my equity curve looks like, and I ran it today, and these two algos here are not supposed to run unchecked, but I let them run unchecked. I've got to figure out how I want to move forward. But so if I hit generate, this is what the equity curve looked like today. It's a loser. That's from everything. Let's go to 11, 17, 17, generate. Okay. And the equity curve is just a bunch of losses. But again, that's because I let these algos run unchecked. Let's get this one out of here. All right, so down 16 cents. This is what the equity curve looks like today. The first one that fired off, it was a winner. That's when it was checked, when the algos were when I had the filter on it, but it was also the first trade of the day. It was like, it was early on, and then I turned off the filter because I just wanted to let the algos just run wild, just take the collar off, throw it a bone, and just let it run wild. And this is what it does. Okay, so what I really need to do is, I think it's probably more okay to let the 5 minute run wild as opposed to the 1 minute. But when you're looking at the 1 minute, you're such in a smaller time frame with more nuances with price and everything like that. I think that's the one that probably shouldn't go unchecked. So what I do is I should go here, click that, click this, and then liquidity time filter. I think it's all. There's one for all, never, or now. So after 2 seconds passes, it should make sure that the checks are in place, and the algo should not take any trades until 2 seconds have passed. Data providers and everything are loaded, and it analyzes the chart, right? So BIP looks like it's still, BIP has got nothing going on. And so it hasn't done anything yet, probably because it hasn't got another tick. Once it gets another tick, then it should clear that out and not take any trades on BIP. Okay, and so there it goes. All right, so I already did it. All right, so this up here, who can run on the 5 minute time frame? Well, if you look at my algo, the name of it, like I say, I have it categorized, and the nomenclature for the title lets me know that this is set up for the 1 minute time frame, and it was back tested over 5 days. Now this one here should be set up for the 5 minute time frame. It was back tested over 120 days on the symbol INTC. So this one, since it's set up for this algo, since it's set up for the 5 minute time frame, I'm just going to go ahead and allow this one to, instead of the liquidity time filter starting now and moving forward, it'll just say never. Okay, so it'll prevent the checks from stopping the algo from running. So, right or wrong, right or wrong. Okay, all right, now this is what I want to show you, because this is what I just came up with. This column right here. These are shares outstanding, right? So you all know what shares outstanding means. The amount of available shares for a company or a traded company. So the shares outstanding here, these are the millions of shares. So this would be what, 6 billion or something like that for Sony, and that makes Sony a large cap. 6 billion? That doesn't seem right. Well, either way, because the mid cap is 2 to 10 billion, and then large cap is over 10 billion. So this must be 136 million. 136 billion? Let's look it up. Sony. Sony market cap is 187 billion. Okay, so Sony market cap is 187 billion. Oh yeah. I'm sorry. Forgive me. Again, we're talking market cap here. These shares outstanding have nothing to do. I don't want to say it has nothing to do with market cap, but you take the number of shares outstanding more or less, and you multiply them times the last price, and that should give you about your market cap. Yeah. Okay. All right. So anyway, shares outstanding, that's the number of shares that are available, but this is in the millions. Okay. And then so the volume traded today, the amount of volume traded over top of the shares outstanding gives you an idea of how much liquidity, how much action is going on that specific chart at any given time. Okay. All right. So let's open this up, make it a little bit easier to see. Okay. All right. So again, if the full amount that, if 712 million shares is the amount of shares that are available for trading, and so far today there have been 712 million shares traded, then this will be a full 1. This will be 712 over 712, which will be a full 1. So a full 1 means that, it really doesn't mean anything, but just for relative purposes, if you have a 1 here, that means that relative to the amount of available shares, you are kind of in the middle of the road. But if you only traded 7 shares instead of 700, now instead of that full 1, now it's what, 10? So no, it's 1. If it's 7, then it's 1, or 0.1. I'm sorry. All right, and so if you get a 0.1, then that means that you don't have. In other words, comparing 0.1 to 1 to 4, wherever you are in the spectrum, the higher up the spectrum you are, means the more liquidity that's being moved, the more active the chart is. So I say that to say this. I finally got this script together. It's been something I've been thinking about over the last half week. You see where my major losses are. Now I would say major, but I mean, I know we're talking pennies, and I know we're talking, this is not over long term. This is not over months and months of trading, years and years of trading, nothing like that. So, the sample size is small, right? But here, MVTS, I'm positive. Here, Sony, I'm positive, even though Sony is red. And here, BIP, positive. Here, AES, positive. But the places where I am red, these 1-2 places where I am red, this is red. This is red. And you say, but Eric, what is this? And look how low this number is. 0.09, that's pretty low. 0.05 on BIP, even though it moved up, is pretty low. But remember, BIP was the one that we just looked at, and it was such little liquidity. I mean, at least on today, right now. So there are different days. This will be different colors for sure. But the lower this number relative to the rest. Now, a lot of these are technology. You probably want to keep in mind your different sectors, right? So one sector, one day is going to move more than a sector on another day. But I'm looking at a lot of technology, obviously. And then there's some consumer, I think it's consumer discretionary, consumer cyclical. So I want to get a few more of each of them. So I'm not looking at all of one bucket, but we're talking relative. Relative, the reds are the lower ones. The yellows are the middle ones, and the greens are the higher ones. And you say, well, how did you come up with that? Well, I made a script, and again, it took me a while, and I really just put it together. So I've got to go back in it and clean it up and fix some of the errors. And I was going to use bottom third and this kind of thing from calculation. But what I ended up doing was so I made a global dictionary, and the dictionary checks to see if the symbol is already in the dictionary. If it's not in the dictionary, then it goes ahead and makes this calculation for the volumes of shares to outstanding, and then it drops the value into the global dictionary. Well, after we get all the items in the global dictionary, we're going to look at the quartiles. So you got the first, I'm using the first and the third, first, second, third quartiles. So imagine this volume here. You've got a group, you got a population size of, 20. And so somewhere in here you have a midpoint. Somewhere in here you have a upper midpoint, which would be a third quartile. And somewhere down here you have a lower midpoint, which would be your first quartile. So your first, your second, and your third. So what I did with these is I said, okay, all right, well, I could just do it like this. I said, okay, well, what is the lowest? And man, when I do it like this just looks so pretty. I haven't done it like this before, but this looks very cool. All right. But anyway, so this lower quartile, I made it so that it shows up red. This mid or inner quartile between quartiles 1 and 3, I made it so it shows up yellow. And this quartile, I made it so it shows up green. I think what I want to do moving forward is probably make a function, or I don't even really need to make a function since I already have the global dictionary set. Maybe I could make another. Well, I've already got the global dictionary that has the quartile ranges in it. And so what I could do is I could just maybe make a function that ties into the global dictionary, or just tap right into the global dictionary and say, hey, as long as for today, your stock is at least above this first quartile, right? I mean, we really don't want to be trading these, I don't think, right? Down here, red, there's not that much liquidity in these on any given day, right? So on whatever day I traded Sony, maybe it was a more active day. It's just not today. We know that volume moves up and down according to where it is with its price action on a larger time frame. So just because it's low today doesn't mean that it's low every day. I'm just saying when I trade these on any given day, I could probably superimpose another filter into my algo that says, all right, well, only trade the ones that are over the first quartile. That'd be very cool. And or if you are looking to, like I had one algo that will scale in. If you are looking to scale in, then maybe only scale in on your on your stocks that are in the upper, your fourth quartile. But if it's in between if it's in the inner quartile, then just take a regular position. It's also odd, just looking at this though, it's also odd. It's not really odd. It's not odd at all. Look at this. Look at the difference. You see the market cap? The market cap, we have the smaller market caps at the top, the medium market caps in the middle, and the larger market caps at the bottom. And you say, well, why does that make sense? Well, it makes sense because if you have a larger cap, then one or two things can be true, or both, but probably one. You have a lot of shares being traded against a small price, or you have or like if you're in here or somewhere, you might have a real large share price, even with a smaller amount of shares, but with a real large share price, making your market cap very high. And if your market cap, but typically you might expect that the shares are going to be larger and your price is going to be relatively, only because that's how I have it filtered. I'm only looking at stocks over here between, $15 and 60 or 70 bucks, something like that. But so if we're all within that same general price range, with the price being relatively constant, if the number of shares is greater, that makes your market cap greater, because it's just a calculation. Shares or price times shares equals market cap, right? And so yes, we have larger market caps here, but that's probably just because we have a large amount of shares. And if we have a larger amount of shares, it will take more volume for this number to be higher. If we have a larger amount of shares, it will take more daily volume for this threshold to get closer to 1, because it has to trade that many more shares. But keeping that in mind lets you know, compared to the shares outstanding, if you don't have a lot of volume, the likelihood of a price movement washing out, the likelihood of a price movement being washed out by a small amount of volume is small. You can't come in here with 10,000 shares and expect to move Sony a great bit. Not when it's got 6 million or 6 billion shares outstanding, whatever. I have to look back. I think my shares outstanding might be in the million. I think this is already, this is millions. Okay, so, or maybe it's thousands. What is the shares outstanding? Let's look at the shares outstanding, because now I'm curious. But either way, if you're on a smaller shares outstanding, this is why penny stocks just fly. They fly off the handles, because once they start getting some volume in, and it doesn't even take a lot of volume to move something that is not heavy. This is not heavy, and so it just barely takes your pinky finger. A little bit of volume can knock it over and just throw it in one direction. But if you take your pinky finger here and you put it against Sony or one of these, it's going to get smashed, right? So let's see. Shares outstanding for Sony is 6 billion, right? So, and you know what I need to do? I need to take this number, so that, because I don't like, you know what? I could just put an M behind it, I think. Yes. That's what I'm gonna do. So this is shares out. So this is 6 million, and then times this. These are millions, and so times this number will give you 6 billion. Okay. And it's a very clearly a large company, but yeah. So now I've got to make a function to be able to capture where I am in the quartile on any given day. And I need to make sure that this updates, because now that I have it set up and it's set up properly, as volume moves, and I probably just have it change on every bar, as volume moves, I just need to recalculate and make sure that this is dynamic and this changes during the day. All right, let me see here. Shares outstanding. What is it? I think that's plot 4. I need to clean it up, but plot 4. Volume of shares outstanding, and then we will do, this is a number. So we're going to do num to string, and we don't really need the decimal place. We can just use a whole number. So we will do 0, and then we will add that with a nice big old M behind it. Verify that. It'll take a few seconds for everything else to update. You know, I put that on the wrong one. Put that on the wrong one. All right. Like I said, I know I've got to clean it up. But I was excited about this because it's not just all about trading. It's also about risk management. And if you can't manage your risk, or if you don't have some type of litmus for your risk, then you're fish out of water. Fish out of water. Plot 3. Shares outstanding. Round, we've already got this. So round it to 2 plus M and num to string. Oh yeah. Okay, there we go. So, but unfortunately, I mean, I could go back in and do some other stuff, but because, well, it's not that big a deal. But I lost the comma right here. I lost the comma after 6. But you know, we could always go back in with the string, the number, converting the number to the string, and figure out how many characters are in it, and then add a comma. We could do all that fun stuff. But there's not many symbols that I have that need a comma anyway. But that is something I'll consider going back and looking at. I need to put a space in that just for me. Sorry. Okay. All right. So that's pretty much it for me, folks. Yeah, we got some interesting stuff going on. So I'll finish this up later and make this prettier, and you will see this on my charts from here on out. So again, as always, look at BIP. I mean, it moves, but you know, and again, like this is a 15-second chart. If we go to the 1-minute time frame, then it might look better. 5-minute time frame, it might look better. But looking at some of these stocks, I almost figured I really need to be trading these things on a weekly time frame. Oh, the weekly is up here. You see, they look much cleaner on the weekly time frame. So I think that's what I'm going to do with my options. Is I will look at trading the options on the weekly time frame. So that way I can trade pennies on the lower 1-minute time frame. I can work my mid-large caps primarily on the 5-minute time frame, and then I can work the options on the weekly time frame, and futures will probably be on the intraday as well. So daily, 1-minute, 5-minute type time frame. Okay. All right, folks. Hope you got a little something out of this. It went way longer than I thought it would, but that's me. So, all right. I'm Eric. I'm out. You know what? I don't know if I want to do. Yeah, I'm changing up my motto. It's code confident, trade calm. Yeah. So, code confident, trade calm. I'm Eric. And then that's too much. Then that's too long. All right, code confident, trade calm.